Welcome. I am here with Andrea Pirrotti. She has an extensive background. Andrea, you were on the Flex Uncensored podcast, true? Yes, it's been a while.
Yes, it
I
has.
will cross-reference that episode because we can't spend a lot of time on your extensive background because we have some topics to dive in today and we've been pre-chatting and used up a lot of time. So, your current role is head of real estate at infinitSpace. And I'll have you talk about that a little bit and give, a brief background so that people know who they're listening to. And you've started writing. So, we'll link to your articles as well. And you're a great writer and very thoughtful and insightful. So, thank you for joining us today.
I always love riffing with you, Jamie. Whether it's walking by the bay and
I know that was a fun surprise
game,
I
or whether
know.
it's talking to you on your amazing podcast. How many episodes is it now?
Well, we're like over 400. This is
That's
like, I don't know,
crazy.
404 or 405 or something like that. Yes, we're going to have to do it again because I know we're not going to get through everything we want to get through today. So,
Yeah.
okay. Yeah. I mean, yes, your LinkedIn says you're a flex workspace authority, and you actually are. Not like, oh, I worked at WeWork for 2 years and now I'm an authority. Like legit deep experience. IWG, expansive. I mean, Office Evolution. You have done a lot of time. Okay, so tell us what you're up to now and kind of like how this is informing your perspective, and let's dive in.
Yeah. One of the things that I loved about working for Regis, now IWG, was that I ran marketing for them globally across 65 countries. And while I spent, oh gosh, a good decade or so working for almost every major operator here in the United States, I really missed the international experience and the international flavor. So I spent 2 years commuting to the UK working for a company that called Newflex that had 6 co-working brands underneath it. Very cool opportunity. There I met again a fellow who I worked with at Regis. And when we left, I said, we got to work together again. Well, he called me several months ago and he said, Andrea, we're ready to have you join infinitSpace. infinitSpace is a co-working operator. We were just by the Dutch Financial Times awarded one of the top gazelle positions in the Netherlands, meaning we are one of the fastest growing companies and also profitable. So it's a really huge award. And we're doing some crazy innovative things. Our co-founders, our CEO is a former MD of WeWork Europe. And that was a really thriving, very strong business. And his brother, who's co-founder, is CIO, so in charge of technology. And so what we're doing is that we're taking this incredible thing that WeWork created, truthfully, and they did, in terms of capturing hearts and minds and making human connections and building community, but and layering in technology, and we've got a bunch of exciting AI things that we're working on, but really focusing on a sound and fundamental business model, right? Because at the end of the day, being a solid and strong operator is what it's about. So they asked me to come here and take what they're doing and bring it to the US. And I said, or to the Americas. And I said, hell yes. And so that's what we're doing.
Okay, so your audience is asset owners and helping them spin up a brand, a flex brand that they don't have to operate. So you operate on their behalf.
That's exactly right. My target audience is asset owners. I think something also that's very unique about my position is that a lot of my counterparts in this category are responsible for solely putting dots on the map. And that causes a lot of friction when that dot is added to the map, and then you have to have the sales and marketing people sell it, and they can or they can't, and then you have to have the operational people run it, and they can or they can't. And so my mandate really is to open up a certain number of workstations within a cluster, but also ensure that that community and that city is vibrant enough in order to fill those workstations. So yes, I am working with asset owners to take a fresh look at their product. And I will call what is inside that building a product,
Yeah.
right? They have offices, they may have amenities, a restaurant, they may have a gym, they may have a common space or whatever. But I want them to look at that product with fresh eyes and say, hey, listen, what do occupiers want? We all know that there is unprecedented in many markets vacancy rates, unprecedented sublet space that's on the market. We all know that agreement terms have shrunk from 10 years to 7 years. The size of the deal has shrunk 33%. We all know as we walk through offices, there's about 47% footfall. And so the product that the landlord is offering right now is not meeting the needs of the occupier. And we can, with very little friction, very little CapEx, very little agita, as my Italian grandmother would say, come in and activate that space, get it cash flowing faster than you would a traditional lease, enable the asset owner to say yes for every requirement that walks through that door from 55 square feet to a full floor, and really revitalize the asset. It's an exciting thing.
Okay, let's talk a little bit about product market fit. I mean, so that's one of the articles you recently wrote in For All Work, and talking about just like the occupier is looking for more flexible space, or that fits what they need, which is probably less space than it was before. You gave an example in our pre-chat. You said, well, you toured a building and, there was an occupier who had a large floor and it's occupied but not utilized. And when you asked, they said, oh yeah, well, they took, a smaller floor plan, in another one of their buildings. Great. And they're sort of like letting that. I mean, that's a good example. So they now have this large floor plate that is a product that is not in demand in that marketplace. So how do you solve that? What are you doing to kind of adjust the product in a case like that?
Yeah. And just to double down on this, in what world, first of all, facilities, the office is
Yeah.
the second largest fixed line item behind people for any business.
Yeah.
In
Yeah.
what world are you making 5, 10, 15-year
Yeah.
fixed decisions
Commitments.
and
Hmm.
commitments, right? For the second largest fixed line item for any company. And this has been an issue that's been explored for decades. I mean, we did a study called the Agile Workplace with MIT and Gartner Group 20 years ago that talked about how workspace solutions needed to be as agile as the businesses that they were serving. And so when you walk into, and you've done it too, right? You walk into a building and they're like, yeah, it's 80% occupied, but the seats are empty. I mean, there's no vibrancy in the building. It just looks,
It's
it's flat.
flat. It's not activated. Yeah. Yep. And it's not compelling. So then when those leases are up, it's like that whole chicken or egg problem. You're showing space, empty space that has, yeah, no vibrancy, no activation. So it's not going to be compelling.
And so what owners have done now, though, is that they've gone in and they're putting in spec suites because they're like, oh, I have the solution. I know how I'm going to respond to smaller, shorter term, smaller requirements. I'm going to put in spec suites, which, by the way, on the surface appears to be a very interesting solution. But the upfront CapEx required to the build out costs for these spec suites are very high because a lot of them have kitchens and amenities and all these things within the little spec suite.
Hmm.
And you're not getting the term. So it's a losing proposition.
Yep. Yeah. And it's
Why?
not serviced. And so you're not getting the rent premium that a flex office would. So you're doing all this CapEx. It's not that efficient for the end user because, to your point, if they've got 3,000 feet, but 1,000 of it is, kitchen and meeting rooms that they never use, it's not a great deal for anyone.
It's not, but if you follow the money, because I couldn't imagine, I said to myself, well, why on earth are these landlords investing in spec
Yeah.
suites? Why? Because they are valued as like a traditional lease
With the banks.
with the banks.
The banks. Yeah. So they can get financing to do spec suites, but maybe not to do flex, which we'll talk about in a second.
Yeah.
So, yeah, I mean, okay, so product market fit. So spec suites aren't necessarily it, but this is a conundrum. So you have a big floor plate and maybe less access to capital to do some work to make the product fit. So what is infinitSpace looking for in terms of solving that product market fit in a capital constrained
Yeah.
situation?
And I don't even mind. And if we think about, if we think about, who can we correlate this to? If you think about a BMW 3, 5, and 7 series, okay, it's really simple. You've got a product at a different price point with a different set of features, right? So that's how I think we have to look at these assets, at these buildings, and say spec suites really could serve a purpose, right? I wouldn't mind running them for the landlord, but spec suites do serve a purpose. And so then what you need is an entry level point, right? Not even an entry. People like to call it an entry level point because everybody thinks, oh, you're going to grow up from a
Yeah.
flex into a full
Yep.
floor tenant.
Not necessarily the life cycle. Yeah.
Not
Yep.
necessarily the life cycle, but the full floor tenant may need overflow space, swing space, disaster recovery space. Leaks happen, small fires happen. And so it does become, or they may need to shrink and right size. And so then you don't have to say goodbye to your full floor tenant. You can still service them within the building. So what do we need? Listen, the first thing that I want to do is I go into a market, and of course we're all doing this. We want to take over purpose-built space. And again, everybody says to me, well, what about your build out? What about this? What about that? What about your brand? It really has nothing to do with it, right?
Hmm.
Because what the magic is how you operate the space. All things being equal. I mean, you don't want to go into a bug-ridden, you know, space with leaks and chipping paint, obviously. But all things being equal, we've taken over several WeWorks that they could not activate, and we've activated them. We're running them. They're vibrant because of our magic of how we are able to operate the space. Then the magic comes into ensuring that the basics are done, focusing on the humans and focusing on just driving incredible operational efficiency into the space, which is why in a lot of our locations, you'll walk in and you'll see a barista, because that's welcoming. It's,
Hmm.
who doesn't want to connect with the smell, the aroma of coffee, and you feel warm, or, I once had the opportunity to fly I was flying on JetBlue, and the CEO just happened to be on my flight.
The JetBlue CEO?
Yes. And
Wow.
back in the day, this is like many, many, many years ago. And he's like, you can ask me any question you want. And I said, how on earth do you afford to give the full size cans of soda?
Mm.
And he's like, it cost me nothing. I mean, he was talking about arbitrage on jet fuel and the screens and how he has a new fleet and all that stuff. But after we talked about that, he said, it cost me nothing. And he said, high optics, low friction. You walk in, you get a big can of soda, you feel like $1 million, and that's cost me close to nothing. And so that's the way, there are a lot of things that you can do. High optics, low friction, meaning low cost,
Hmm.
cycles required to pull it off. And so we do have this magical way of operating the location, and we have videos showing the community in action always. But what we want to do is take over the space and activate it as quickly and efficiently as possible. And the other thing that we do is ours is a sort of a semi-white label.
Hmm.
There are a lot of asset owners that I speak with who have spent a lot of time and money and energy investing in their building, investing in the asset, investing in the brand. They've branded it. They're naming these buildings. And so why would I want to take away from that? And so our consumer-facing brand is called Beyond. So the brand, and to underscore the partnership, is Beyond, and then either the name of the asset or the address. And when you go in, the idea truly is for us to weave ourselves into the fabric, if you will, of the asset. And so if I have a choice, I'm going to choose fixtures and colors and styles and a palette that mirrors the design standard of the asset.
That's already there. Yeah. So the
So there.
friction is so much less because the typical operator cares so much about their own brand, right? And their own build out standards and what they need to do to accomplish their return or level of revenue to attract their customer segment. So you're really looking at, you're doing the due diligence to make sure a market works and that you can cluster and there's enough demand. But then you're kind of fitting into the demand that's there to some extent, right? So you're not saying, oh, does this work for WeWork or a Kiln or a Mindspace or a whoever? So you're blending in and then you're productizing and merchandising. Kevin, you weren't at the GWA conference. Kevin
No, that's
Whalen
FOMO.
does marketing in the space. And I'd be curious how you think about this. And he was talking about sort of one of the trends he thinks is really happening is it's like the productizing and then the merchandising, which is what the owners don't do, right? Like they may have created a brand around their building and amenitized it and done some things, but they don't really know how to productize and then merchandise what's there. Merchandise meaning like sell it at a unit that makes sense for the end user. Like to your point, okay, maybe somebody still wants 10,000 square feet or they want a spec suite or they want, but how does the user go in without a broker, but potentially to see what's possible in that building? So you're kind of bringing that to the end user level and letting people sort of shop in a way that they couldn't before in that building.
Well, that's absolutely right. And so a prospect will come in and we'll sit down and we'll listen to what their needs are, right? I mean, this is sales, consultative sales 101. And we'll listen to what their needs are. And only after we understand their needs do we prescribe a solution. And the solution is prescribed with an eye on enhancing the vibrancy and the NOI of the asset, not driving occupancy within our particular floor. And why is that? Because we're in partnership
Right. Yeah.
with the
Like
landlord.
true partnership. It's not inserting your business model. It's like looking at their needs and what will work in the building and what do they need to activate and what's already, yeah. It's just a different mindset, which I think is, yeah, really interesting.
And I think Kevin's right, by the way, in terms of, one of the things when I took over the role of, I was chief development officer and marketing officer, and I also took on the role of real estate and construction at Office Evolution. And I was having an anxiety attack because I said to my husband, real estate and construction? What? And he was like, Andrea, this is a tech guy, okay, quite frankly. He's like, it's product. You've done product your whole career. All it is product. And when you look at it and you bring it down to that lowest common denominator, it is you have a blank space and now you have to build out this product suite, if you will, in order to what? Optimize the revenue per square foot. And that is our business. And Kevin's absolutely correct. That's not the business of the landlord at all. They have one quiver in their little pack, and that is I've got a full floor and here's your TIs and here's your free rent
Right.
and I need the securitization and blah blah blah, because they're making big lofty decisions, multi-decade decisions. But that's not our business. And that's
Right.
why landlords often fail when they try to incorporate flex into
Yeah,
their.
they just don't have any of the competencies because it's also, I mean, to your point, sort of back to the spec suite. Like, well, that could be an answer, but maybe the answer is spec suite, but it's serviced. Tishman has that product, which I love. So,
Mhm.
Tishman has this great like ascension, model of which, you talked about earlier. It's like, well, you
Yeah.
can have co-working space or you could do a spec suite and you could have your spec suite serviced with snacks and it can be, you one point you can call somebody when the internet goes down. Like it's a different experience. So the landlord rights could sort of productize, but they don't know customer acquisition and then they don't know operations and service to that extent. So you're just layering all of that on for them. And again, in a different level than the typical operator who goes in just to run a co-working space, their brand, that's their build out, that's their everything.
Yeah, and I think what's really important is something that you and I talked about is that it is not a one size fits all solution that we can prescribe flex to be incorporated into all portfolios, all assets. You and I
Yeah.
know very well that the unit economics do not work really when it's below a certain size, just because of the fixed costs that are involved in running a co-working space. And so what we do really is we go in, we listen to the needs. One of the first questions that I ask when I'm speaking with an asset manager or an owner is, how do you feel about flex? What are your, how do you want flex to add value to your business? Do you think it can? Because they're talking to me for a reason, but there are some instances where I will not be able, because of the upfront costs required, because of the ongoing fixed costs required to run the space, I might not be able to help them.
Yep.
And I think we have to be
And
honest.
you'll tell them, right? You will tell them if you cannot.
Yeah.
Thank you, Andrea. Right. Because I mean, because you are doing diligence and you know what works and doesn't work, and you're not gonna insert yourself in an asset where it's not the right. But so I mean, will you sort of like help productize, like maybe you do run the spec suites, or do you only do a project when you can do a layer of flex that is, co-working, where you're really getting the rent premium on the individual offices?
I can be very creative in terms of the product mix that I provide. I walked a floor the other day in a city and there were spec suites that had already been built out and nobody was running them. And I'm in discussions just to take those over.
Yep.
Nope.
Okay.
I mean,
Yeah.
we can be
Because you see
very,
them and you're like, I know marketing, I know customer acquisition, I know service, I know operations, like, and that's the layer that's missing. So the product is fine. It's just the rest of the layers that they need.
yeah, I think so. And I think, you and I have been in this category long enough, and you as an operator and now as as an advisor as well. Our business is not rocket science. It's just not. But there are certain fundamentals that are often missed that are fatal,
Yeah.
which is what for the business,
Hmm.
which is why we are able to go in and take over failed
Right.
operators because they've made those fatal decisions. They haven't taken into account that ours is a world of arbitrage. Ours is a world of expiring inventory.
Yeah.
You will never recuperate that revenue that you lost by having that office mispriced on the market for a month or two or three because you're trying to hold on to your,
To
and
what you think is market rate. It's like
it's
trying to sell
market.
yes.
If you think it's market, I do love it when I listen to operators and they're like, this is market. No, 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 no. Market is what the market will bear, what people will buy
What
it at.
someone will walk in and sign for 100%. Yeah. Yeah.
And there's also little tricks of the trade, like when do you go, seasonality, what
Yeah.
time of the year do you go heavy on marketing? What time of the year do you focus on conversion, ebbs and flows of market trends? How do you discount? How and the different levers to pull in order to discount. So,
It's not rocket science, but there's a lot that goes into, I
oh,
mean, for the upfront, because I guess the other piece is you can make like a spec suite product. I guess you just align the OpEx with the business model, because the OpEx for a typical, heavy office dense co-working space is there you have to hit a revenue target that covers OpEx, which includes marketing in my numbers, and then there still has to be profit left, right? So
there does, and in many instances, I actually haven't seen an instance where, again, given the right size, I have not seen an
you can,
instance
yeah.
where
Yeah.
I can't yield a premium above and beyond what they would have
Okay.
gotten from a base market rent. Not only that, but I think the most important thing is that if you look at it, if by the time and a landlord, if they have a vacant space, by the time they find a tenant for that space, by the time they give TIs, by the time they build it out, by the time they give out free rent, they are not cash flowing until year 4 or 5. And even then, what happens, they have this idea that because they've signed a 7 or 10 year lease that they're going to get that money in perpetuity. Baloney, not in
Yeah.
perpetuity, for the fruition of the lease. And that's not true. So versus a situation that may seem risky, although co-working has been around since the 1960s, something that might seem risky, but it's different. It's a different scenario. So who has the courage to have the conversation? Who has the courage to raise the idea to ownership? Who has the courage to figure out how to incorporate flex into the portfolio? And those are the people who are going to win in the long run, because the writing is on the wall with these, with these, vacancy rates. By the way, you look at New York, like, oh, the leasing, the activity is more than it was, and it's back to where it was in 2019. But that's on some very select inventory.
Right.
Idea of
Right.
flight to quality,
Yeah.
30% of that inventory is driving most of the volume of that activity.
Yes.
Well, there are a lot of other locations that are ripe for co-working. And that's just
San
me.
Francisco's the same way. I mean, you were here recently, and right, there's a lot of AI leasing, and so that's what you see in the media is, those wins. But to your point, that's right, 20 or 30% of the inventory. It's all clustered in one area going to certain types of end users. Okay, I know we have a finite amount of time. So I'm curious, you've also been writing about the challenge of banks not recognizing, flex revenue and struggling with, like, they're not doing the, oh, it's like a hotel, which is a model. Your article talks about that, like a model that's been around forever. And they understand that. And it's the customer turns, every 24 hours ish. And they understand that. And they are happy to model and value on those assumptions. But when it comes to flex, they really struggle with, okay, so there's no, when the owner is managing it with no lease in place, because they know how to value a lease, but the owner wants to do it, they struggle to value that and want to include that revenue because it's risky or too short term. I mean, I'll let you sort of maybe more eloquently frame the challenge. Where do you think we go from here on that?
Well, I mean, between me and you, because we've seen under the covers of so many operators, we know that the average initial agreement term is 11 months. We know what the
Yeah.
average rate is.
Yeah.
We know what the average churn is, around 3%, 2.5%, 3% per month. We know all this. The only thing that I can say is that it's likely that our category is just too fragmented,
Mm,
so that we're not even, gosh, we don't even know what to call ourselves.
yeah. Right,
Flat,
right.
co-working,
Yes.
blah,
Yeah.
blah, all
I
the
mean, the hotel
things.
industry, though, is also very fragmented, but you think there are enough large public companies that kind of set the stage and make it possible, and enough transparency
Yeah,
that,
we only have IWG.
yeah,
Who
yeah,
else is there
yeah.
who has to publicly share their information? And I mean, we as a category have also been talking about, well, what are the metrics? What are the key performance indicators, and that we should be looking at? I think intuitively we know, but the category hasn't agreed to it. So I think that is the issue. CBRE a couple of years ago came out with a study or some data to suggest that if it's very safe to put 10%. They even said more than 10%, but let's just err on the conservative. It's very safe for an owner to put 10% of their portfolio into flex, which is what we've been saying for the last 25 years. Hey, landlords, put 10% of your portfolio in flex and increase NOI in your building, increase vibrancy, say yes to every opportunity that works through your door. And also, we've been saying the same to occupiers. We've been saying the same to enterprise customers put 10% of your property portfolio into flex? Of course you would. There is no world where you have a portfolio fixed with long-term holdings. And maybe that's because up until now there hasn't, for the last 20 years there's been a solution. But I think everybody's eyes have to open that this is here. It's now. And maybe if we CBRE can do another report that's recent.
If you're listening, right.
Listening, CBRE, or
Yeah.
maybe Cushwake, you've been very forward in your flex, offering expertise. Come on, give us that number.
Yeah. I think, yeah. So it'll take kind of more data, more. I mean, do you think it'll like a level of desperation will do it? I mean, your article talked about, the number of assets that are, not making their, payments. I mean, so like, at what point do they, like, sort of, yeah, I mean, it's still more financing from the bank to do a build out, which is the problem you're trying to solve, right? Is like low CapEx. You're trying to go in and sort of productize what's existing without requiring more financing,
We
ideally.
did totally. We
Yeah.
totally for that. I mean, the rational discussion is there. The elements for a rational discussion is there. But it's just like nobody ever got fired back in the day for hiring IBM. I don't
Yeah.
know, dating myself, that back in the nobody ever got fired for hiring IBM. It's just this is a quote unquote newer concept that because of the history of operators restructuring, backing out of leases,
Yeah.
et cetera,
Yeah.
that there is potentially a fear. But my point is, then why would you do a lease with an operator? Why
Yeah.
wouldn't you find the right partner to come in and to create a solution together? I mean, again, less than 10% is the magic number.
Yeah. Yeah. Okay. Andrea, I know you need to go. We will put a link to your writing, your articles in the show notes so people can follow along. And I think we just need to agree we should do this again because you have such an interesting perspective and many, many areas of expertise that I would love to hear more about. So thank you. We'll call this an intro episode.
And thank you. And you
Yeah.
and my brain. So the feeling is mutual.
Okay, great. We'll put all your links if anybody's listening and is interested in infinitSpace and the Beyond brand. We will put those links in the show notes and you can find more about Andrea there. And Andrea, until next time.
Thank you, Jamie.